So welcome everyone. This is the first episode that we're doing of Macro Mondays. It was a previous segment we were doing that was quite popular, and we decided that actually perhaps in this circumstance it would be great to do these sort of things live, especially when you're talking about market events. So Macro Mondays will now be Monday mornings, and we'll be riffing on the last week's market action and the kind of catalysts and events that are going on for, let's say, 20 minutes every Monday, just to keep everyone up to date. So last week was a huge week. Dave, I'm obviously joined with Dave MacLeish, founder of Wedge. We want to talk about lots that's going on in the market. Dave, you got any starting thoughts about just the segment, and then we'll jump into the topics?
Yeah, great, Charlie. Thanks for having me. I think the whole idea of this was just really to talk about what's happened and what we can be prepared for the first part of this week. And obviously there was a lot that happened on Friday, so it's quite timely that we start this now, given there's plenty to talk about. But when we run out of things to talk about, we'll just stop and let everyone get on with their days.
That's right. So I woke up Saturday morning quite shocked to see the market down the way it was, but the indices were nothing compared to what obviously had happened in the crypto market. And the crypto market's much smaller, and I think it's inconsequential, but the crypto market, especially those smaller kind of coins and networks, got absolutely obliterated in a kind of what seems to be a liquidation event of kind of in the order of perhaps 10x the prior largest liquidation event. And my kind of thought process there was, well, we're seeing some of the leverage that's in these markets and on these exchanges kind of come to bear there. So I spoke to a couple of crypto people in my network, and they were pretty shocked by the amount of vol. However, Bitcoin really didn't move in comparison to those other assets. We're talking of moves in excess of 30%.
And so why do you think that is, Charlie? Like, as far as Bitcoin not moving, but the others moving, what does that tell you? Or what does, as far as your network goes, what are they telling you that relates to?
Well, I think that, I mean, if you look at markets more broadly, you would kind of say the same thing for kind of more speculative, smaller companies that took a bath on Friday versus, I guess, the index that didn't take as much of a hit, right? What was also interesting is that you saw gold up, dollar up, and Bitcoin down. So, but not to the same degree as some of these other kind of assets or cryptocurrencies. So I would say it's purely a leverage play, and that's why you didn't see Bitcoin move down as much. Clearly, there were people betting against the market in size. We saw a lot of unusual short positions just before the Trump announcement. So I think that kind of explains it, if that makes sense. I mean, look at Solana.
Yeah.
Solana's got a market cap of, what the market cap is, 107 billion. I think the liquidation event, not in Solana alone, but in crypto broadly, was about 19 billion.
Right. Yeah, some big numbers. When you're talking about, I suppose, the dollar prices of a lot of these assets are now getting up there, right? That's why these liquidation numbers are just so massive.
Yeah, for sure. So I think the interesting thing to observe as well, which is more in your realm, is that, the long end of the curve rates went down sharply, bond prices went up, and the US dollar continued its strength against the New Zealand dollar in a big way. So we can hit into the rate cut that happened, and then this is an event that's doubled the game on that relative piece of time. So you had New Zealand cutting rates, weakening in the New Zealand dollar, and then you had this event on Friday US time, Saturday New Zealand time, and the New Zealand dollar got even weaker. What's going on there, and what happened with the bond market and the fixed income market?
Yeah, well, I think, Charlie, the most important takeaway for me out of all of that was, like you said, bonds rallying. So that safe haven bid returning to what is meant to be kind of like the risk-free asset. And there's been a lot of talk for a fair while quite recently around bonds not having that same protection or that same risk-free nature to them any longer, largely because of huge fiscal deficits and overspending and all of those sorts of things. But when it came to the crunch, it was quite interesting that the sophisticated investor did move back from more speculative, more risky, more volatile assets back into US Treasuries, and US Treasuries in the back end, which have been the most vulnerable recently. So I thought that was really interesting. As far as how that links with the rate cut last week in New Zealand and changes in currency moves, well, we obviously got the 50 basis point bigger than expected cut on Wednesday by the Reserve Bank. Now, again, it was a kind of a 50-50 call in markets between a 25 basis point cut and a 50. They went for the bigger move, and that obviously put downward pressure on the Kiwi dollar. And as you say, when it comes to, risk off movements, bonds are usually bid, and certainly the US dollar is usually bid. Yep, exactly. And that's exactly what we saw. So that playbook really played through. That said, this morning, we've kind of got the Trump taco trade, which is the Trump always chickens out trade, seems to be back in full force. Only time will tell, but we've just seen a tweet from Trump about 2 hours ago, saying don't worry about China and it'll be fine, and talking about how President Xi's well respected and doesn't want to hurt China and blah, blah, blah. So what we have seen since then is a bit of a relief rally in the Kiwi dollar. So bouncing back a little bit back to where we were, sort of around Friday's close. So there's all this, there's always these different political, geopolitical elements and undercurrents that sometimes flare up and don't. So don't want to really read too much into all of this kind of stuff. But equally, as I say, that safe haven quality of bonds was probably the big takeaway for me.
Yeah. And I think that, like you say, in the short term here, there's no point really trying to overly read into it too much. This was clearly an obvious liquidation event in many areas as well. Forced sellers, leverage being taken out of the system, people's stop losses getting hit, which creates this reflexive move. So, if I look at Solana, just to go back to crypto, because I do find it quite fascinating how much it got crushed, but not too surprising, to be honest. And yeah, they've kind of managed to get almost half of what they lost back since the bottom of that drop. So I guess people are taking that and going, okay, well, it's actually a natural bid back in, right? Because you just have an all of a sudden no liquidity in the market, no buyer. And I think when I was watching the volume, I was looking at actually the amount of volume in the indexes and in the equity market, not in crypto. And the volume didn't seem too out of the ordinary. So to me, that says that there aren't actually too many sellers, apart from forced sellers, at least in the equity market in that move. But there weren't any buyers coming in. So
yep, just this sort of trading in a vacuum.
Definitely something to watch. What do you think unfolds this week? Like, do you think that it's a complete reversal of this kind of call, or is it going to be kind of more status quo? From the
who knows with Trump, and actually who knows with markets over short periods of time. They're clearly very unpredictable, and therefore, spending too many brain cells on trying to figure out the direction of either of those things over a week is going to be pretty difficult. But what I am seeing and what I'm looking at more sort of medium to longer term is that I'm a fixed income guy, and looking at credit markets in particular, so the corporate bond markets has been a really interesting exercise recently, and I think it's telling us something. What I'm starting to see is that historically public credit markets used to lead equity returns, and that was largely because a credit market is essentially lender and borrower market. So as soon as lenders start to get a bit worried about the credit quality of borrowers, they start to pull back, and you start to see that risk premium. So the amount of interest that has to be paid by borrowers to lenders to compensate them for risk starts to rise. And so we've started to see that, and it's not just Friday. We've started to see it in the public market, but where we saw it first and where I think it's really interesting is we're starting to see it, or have been seeing it for a couple of weeks now, in the private credit market. Previously, private credit markets have been very, very idiosyncratic and lacking in transparency. So what kind of went on was behind the scenes, and no one really knew what was necessarily happening, or certainly the public wasn't. But what we've started to see now is a couple of very high-profile defaults coming through in that market. So First Browns and Tricolour, and we've started to see a number of these business development companies, the big private credit players in the world. They've got listed now vehicles that are a really clear link into the quality of those underlying portfolios, and they've started falling in price, and have been falling in price quite considerably at the same time as equity markets over the last couple of weeks have actually been marching higher. So that could be a new canary in the coal mine for me. So I'm really keeping a very close eye on that this week and in the weeks following.
Well, I'd definitely second that. I spend a lot of time just looking at the derivatives market, and when I look at some of these private equity plays in the public market, the listed ones and the companies they're lending to that are also public that you can get basically exposure to, seems to me like the actual market is pricing in how bad they are. When I look at the derivative returns on pretty large moves, the payoff is not at all interesting to someone that wants to take tail risk or basically find alpha in these large moves. The market's basically making you pay a massive premium to be in that trade, which to me means that, well, it's two things, right? It's one is that the market's saying that this is turd, potentially, some of it, but also it's reinforcing the game that these hedge funds and private equity places are playing, which is they're actually selling premium in the market to basically offset their risk and actually generate a return off these pretty poor companies. And potentially the money they're going to make in the derivatives market may exceed actually what they lend out.
Yeah, no, and that's certainly, I'm hearing the same sort of thing. When you get to these sorts of times where, equity markets and risk appetite continues to march higher, obviously Friday, we've got to keep out of that discussion. But when you start to see those types of factors, that fear and greed, and in particular greed now starting to continue to kind of march higher, you do see more of that speculative activity. You do see a lot of that more premium generating types of activity, selling options, those sorts of things, which do set you up for these rather large moves like we saw on Friday.
Well, and this is the behavior that creates the wheel, right? Creates the flywheel for these liquidation events.
Exactly.
So we all have to be aware that just the sheer amount of, derivatives, and that means leverage in the system, both in equities and in crypto, is something that obviously has never been seen before. We don't know some of the consequences, and that's obviously why the crypto market was taken so off guard. Is at the end of the day, they're new to derivatives in the large scheme of things, but people are trading with huge amounts of leverage, and it's actually surprising this sort of event hasn't happened to this degree prior.
Yeah, no, absolutely. And again, I suppose that's going to be something to just keep an eye on. Is what you'd like to see is maybe just a slow deflation of that sort of speculative activity and that much sort of option trading and those types of activities. But unfortunately, usually because of fear and greed, that continues to build and build and build and build until it kind of breaks, and it breaks quite significantly. So that's the typical historical path. So one that we've got to keep a pretty close eye on.
It's interesting that today I'm going so heavy into that crypto space. I also saw an article that apparently BlackRock picked up 45,000 Bitcoin at $105,000 on that Friday.
Wow.
They were coming in and they were big buyers on that day. So that's quite an interesting perspective. Think about But the only thing I kind of actually get a little bit confused about is what's real in the price when you do have such an unsophisticated, unregulated market and so many kind of like so many advanced products being kind of shipped into the market and ultimately used by everyday people.
Yeah, exactly. You would normally assign, that type of activity by the biggest asset manager in the world as being, sophisticated money, but in many cases it's not now. BlackRock is the biggest retail fund provider, and so typically you do have what are less sophisticated investors using those platforms to be able to get access. And I suppose, trying to square that circle a little bit, what it feels like is that, we've been trained as a society really to kind of buy the dip. When you have these liquidation events, is that, that's the opportunity to get something cheap. And so retail investors have been trained like Pavlov's dogs to, step in. That's great. If every time the markets do recover, it's not great for the one time that they don't. But I guess that trained kind of muscle memory has been something that clearly obviously still comes to the fore even on Friday's moves.
Well, I guess it's because of the trend, right? So the kind of, I guess, the systemic rotation in asset allocation, I think that we're seeing is contributing to that, why that buy the dip is working, right? Because in the moment you might have all the air gets sucked out of the room and there's no one buying, but what's the long term trend? And what is the long-term trend that's going to have sustainability versus what is a lot of chasing? And that's just markets, and we're not going to be able to get away from that. That's human nature. So I think that's fine for us.
Yep, agreed.
Awesome. So just to end, the VIX is above 21, closed above 21.66. I think that will get crushed if this buy the dip, mentality continues. And as you alluded to with the Taco trade, you're probably going to see at least an initial bid, if nothing else. But I guess the biggest fear in people's markets would be that the tariffs or the trade war basically kicks off and basically solidifies a recession. Because right now, all the GDP growth is coming from AI. There's a lot of weakness in the job market. There's a lot of weakness in the credit market, consumer debt in the retail kind of car market, etc. Plus the private equity market's a bit of a canary in the coal mine. So you've got these catalysts here that are basically screaming, if things start falling over, we might have a little bit of a recession on our hands, or at least that starts to kind of play into people's heads again. And then is that kind of similar sort of kind of depressed market participant as we saw in April, or at least shocked.
Yeah, I mean, you've touched on a number of great topics, which I'm sure we'll start to cover over the next couple of weeks, because those are rolling, kind of events that we need to keep a close eye on. Things like the health of the consumer and obviously where economic growth and inflation is going. So, yep, those will be interesting topics in the weeks ahead.
Yeah, we'll keep an eye on those, and we'll see how the market trades this week and what new information we get to garner from this kind of surprise event on Friday. Awesome.
Right. Well, thanks very much for having me, Charlie.
Yeah.
Awesome.
See you next time. Peace.
See you, mate. Bye.